In this video, we will cover events in 2026 that could be Bitcoin catalysts. First event. The U.S. Treasury must roll trillions of short-duration debt issued in 2020 to 2022 at near-zero rates into much higher rates. Treasury must refinance regardless of market conditions. It must issue new bonds to pay off old ones. Even if the new Fed chair cuts rates, it will cut because stress exists, not to eliminate all stress. Here are the key dates to watch. February 4, 2026 Treasury Quarterly Refunding Announcement. February 10 to 12, 2026, 3-year, 10-year, 30-year auctions. March 4, 2026, that's the next refunding guidance. Why Bitcoin reacts here? When Treasury funding gets tight, there is weak bid to cover a rising tail. It leads to immediate repo stress. Fed quietly steps in. Liquidity sneaks back into the system. Bitcoin historically moves weeks before official Fed action or before the Fed admits there is a problem. This is because Bitcoin responds to liquidity stress, not headlines. This is the first ignition window. Second event. The Fed liquidity pivot, not announced as QE. March 18, 2026, is the FOMC meeting date. In this meeting the Fed will provide a summary of economic projections, dot plot, and balance sheet commentary. Here is what likely happens if Treasury or banking stress is visible. QT language is softened or removed. Standing repo facility usage is normalized as structural. The Fed's balance sheet stops shrinking in practice, even if it is not announced. Bitcoin impact timing. Bitcoin typically breaks out 10 to 30 days before this meeting, if liquidity stress is visible. Third event. Bank of Japan Monetary Policy Meeting, April 27 to 28, 2026. Japan is the largest source of global liquidity recycling. It controls interest rates by forcing its central bank to buy bonds whenever yields rise too much. This keeps borrowing cheap, but it requires unlimited money printing. Japan fiscal year pressure peaks in April. Why this meeting matters? This is when the Bank of Japan historically makes regime shifts. If the Bank of Japan loosens or loses control, Japanese bond yields spike. The yen swings violently. Global carry trades unwind. Bitcoin reaction historically is within days to weeks. Fourth event. Bitcoin ETF supply shock. May to July 2026. Why this window is deterministic? After the 2024 halving, the amount of Bitcoin mined dropped permanently. This leads to new supply of mined Bitcoin being smaller. Long-term holders control most Bitcoin. Pressure by miners to sell their Bitcoin is structurally low. Now that ETFs are present, they continuously absorb and control the small available supply of coins. What triggers a Bitcoin movement? Main one is sellers disappear. This leads to no liquidity available to absorb the demand. Another is macro shock in rates, banks, or geopolitics. ETFs turn macro shocks into forced spot buying of Bitcoin. This is where parabolic structure begins, not ends. Fifth event. U.S. Bank Bitcoin Custody Greenlight. Most large institutions cannot hold Bitcoin unless a regulated bank can custody it. Clear rules exist. Once banks can custody Bitcoin, pensions gain compliant exposure. Bitcoin becomes balance sheet eligible in corporations. Insurance funds can touch it. Bitcoin stops being speculative and becomes balance sheet eligible. Sixth event. EU sovereign debt stress point. Key time frame, July to October 2026. Italy and France face heavy issuance at high interest rates. Growth is weak. Debt math worsens. ECB policy meetings, July 23, 2026. September 10, 2026. October 29, 2026. Why this matters? The ECB must choose between supporting bonds or defending the currency. It can't do both. Bitcoin benefits as anti-sovereign hedge. 7th event. Commercial real estate refinancing wall, August to December 2026. CRE loans issued in 2021 to 2022 mature and must be refinanced at much higher rates. Rates reset at 2 to 3 times original cost. Potential result: regional bank failures quietly. Expanded Fed facilities. Deposit flight. Bitcoin reacts before headlines, via liquidity data. 8th event. Gold to Bitcoin rotation, late 2026, October to December. Central bank gold buying peaks mid-year. Retail and institutions rotate later. Bitcoin historically lags gold by approximately 3 to 6 months. When Bitcoin catches up, it does so violently. Most likely parabolic window, May to September 2026. This is where multiple fixed events overlap. As a recap, here they are once again. Treasury stress aftershock from new Treasury issuance that took place in February and March. Fed liquidity pivot. Bank of Japan regime shift. ETF supply deficit. Regulatory clarity. That's how vertical price moves happen. Bottom line. These are calendar-locked stress points where debt must be refinanced. Central banks must respond. Bitcoin supply is structurally illiquid. That's the recipe for a parabolic move. Thanks for watching. Click the like and subscribe button to stay informed.